Well, it's now time to start off with the first conversation for today. According to latest report from the Debt Management Office, Nigeria's debt servicing bill has increased by 109% to hit 896.56 billion naira in the first quarter of this year, spending a total of 3.83 trillion naira on debt servicing payments in the past 15 months. Now, the DMO, in its report, disclosed that between October and December last year, Nigeria spent about 310.5 billion naira on domestic debt servicing, while it also spent $286.35 million on external debt servicing, giving a total of 429.4 billion naira in the last quarter of last year. However, between January and March this year, the country spent 668.69 billion naira on domestic debt servicing, while it spent $548.79 million on external debt servicing, giving a total of 896.56 billion naira. Now, Nigeria's debt position worsened in the first quarter of this year as the country's debt stock rose by 2.04 trillion naira to hit 41.6 trillion naira from the 39.56 trillion naira recorded as of December last year. Well, joining me now virtually to discuss this and much more, and we chat a way forward towards debt sustainability and revenue generation strategy for the government, I have the Senior Manager, Corporate Tax Consulting at PricewaterhouseCoopers, Babatunde Olaniyi. Thank you very much for joining us on the show this afternoon, Mr. Olaniyi.
Thank you very much for having me.
Now, let's start off the conversation really with this alarming rise in debt service bill of Nigeria, which continues to even spike further as the DMO reports. Also analyzes this and also says that we've seen an increment of about 109%, and this has hit 896.56 billion naira in the first quarter of this year. How problematic would you describe this phenomenon, really?
Yeah, so I would describe this phenomenon as being very problematic, right? And I think government is quite aware of this problem, right? Because of how they've tried to change the narrative to state that Nigeria does not really have a debt problem, but has a revenue problem, right? And the basis of the government's position really is, if you look at the Nigeria's debt to GDP ratio, which is around the early 20s, around 23%, right? And pretty much that argument is anchored on benchmarking that rate with similar countries within Africa, right? The likes of Kenya, the likes of South Africa that are currently doing 70%, right? But one thing that the government should realize, which I think they do, right, is the fact that the revenue generation problem that they have is actually what makes the debt a big issue, right? Because if we look at, I think we just celebrated Father's Day, right? And you have a father who is responsible for a family, right? And in a situation whereby he has to meet the needs of the family, and close to 80% of his revenue today, right, is being used to service debt, even though he has obligations in terms of payment of school fees, in terms of house rent, feeding, given the environment that we have today, right? That's where Nigeria finds itself in, right? And this is Nigeria that basically is catering for over 200 million people, right? Where we have, at the present, 89% of our revenue generated servicing debt, and this is pretty much the interest portion of the debt. And historically, right, there's a point in 2021 whereby Nigeria had actually used over 90% of its revenue to generate debt. So that literally means that of every 100 naira that Nigeria generates as revenue, it basically uses over 90 naira of it to service debt, right? And we know that definitely looking at the budget for the year, government has a lot of responsibilities, right, in terms of providing capital projects, in terms of providing social amenities, providing for human development projects, right? And in a situation whereby the revenue, right, generated by government is used to service debt, the question can be, how much is left, right, to fulfill government's responsibilities? And there lies what the issue is, right? Now, the question that then comes to mind, right, looking at it in essence, because one question that easily comes to mind when we're talking about Nigeria's debt is, is debt a good thing or a bad thing, right? And that's pretty much centered on what the debt that is collected is used for. How productive are we using the debt capital that we raise as a country, either domestically or internationally, right? And if you look at the trends, looking at over 90% of our revenue going to service debt, it means that we have 10% left in conjunction with the borrowings to basically finance what we have. And when we look at the high cost of governance that we have today, our recurrent expenditure forms a major aspect of our budget. There is the subsidy as well that is also forming a major aspect of our budget as well, right? And last but not the least, our capital projects. Right now, if you want to make the argument that, oh, these debts are being used to fund capital projects that would have productivity implications on the Nigerian economy, you then ask yourself, right, how much productivity are we getting from these capital projects? We know the insecurities that we have within the country, right? You build roads, right, and you are basically exposed, right, to bandits and terrorists. You build rails as well. Then you also face the same insecurities as well, right? So all these things, right, kind of culminate into ensuring that this revenue issue that we have, right, is making our debt levels unsustainable.
Now, Babatunde, let's also look at the fact that the IMF, the World Bank have also said that the loan markets would definitely face increased volatility at this point in time due to the current market intricacies playing out. But to what extent do you see a turnaround between our revenue to debt base, the conversation around exploring tax to reduce borrowings and address the current debt levels isn't as simplistic as it sounds? How do we begin to explore out-of-the-box tax strategies and not necessarily overburden the average Nigerian who is having to deal with heightened inflation rate and other issues beyond their pockets' ability to survive?
Yeah, and thank you very much for that question, right? And this is something that is top of mind by the federal government in the sense that definitely they've acknowledged that they do have a revenue generation problem. So how do they tackle that issue, right? So the finance minister, right, came out with a strategic revenue growth initiative, right, which is meant to basically shift the focus of the federal government to taxes, right? Singing the tune that tax is the sustainable revenue source for the government. And how does government intend to achieve this, right? Which is basically leveraging on data and technology, right? If we look at our tax revenue to GDP ratio of 6%, this is something that is very, very low, right? It's one of the lowest in the world, and it's really much competing with tax havens, which are pretty much very low tax paying jurisdictions, right? And basically that stems to the premise of your question, right? As to the fact that how does Nigeria start to think about out of the box strategies, right, to increase the tax revenue, given that today there is the burden on Nigerian people when it comes to taxes. We know that if you look at the number of taxes that we have in Nigeria, both the official and the non-official ones that are being paid to non-state actors, and there's also the implicit tax as well, whereby Nigerians would have to finance facilities that government should ordinarily have been responsible for, right? And I think with that in mind, right, the federal government, in conjunction with the FIRS, I started to look at ways of leveraging technology. Last year, the FIRS came up with the Tax Pro Max, which was a technology platform whereby all taxpayers who have Naira denominated compliance obligations and payments can file their system, right? And this has kind of shot up tax revenue, right, for the government, with the FIRS raising 6.4 trillion naira in 2021, which has been the highest in record, and the FIRS seeking to beat that record in 2022. There's also addressing the issue from a policy standpoint, right, looking at our gross domestic product, right? Given the fact that that's the value of goods and services that are being rendered in Nigeria, and we have the largest GDP in Africa, right? And you look at our tax to revenue, our tax to GDP ratios of 6%, which does not compare, right? When you're looking at other countries within Africa that are doing 17%, and they have GDPs that are lower than ours. So how do we maximize that economic activity that is going on to ensure that Nigeria generates tax in a sustainable way. Now, one of the ways in which government has tried to think out of the box, right, is with the unilateral action that the Nigerian government has done in taxing foreign digital companies that are generating revenue and profits from Nigeria. This is something that has plagued not only Nigeria, but basically all countries around the world, because previously the old tax laws were built upon companies having physical presence in doing business. But now we know with technology, companies can pretty much sit in anywhere and do business in Nigeria. So Nigeria has come up with a unilateral action to amend our laws in a way that companies such as Google, Facebook, Apple, right, that generates revenue from Nigeria, right, will be subject to tax on profits attributable to their Nigerian operations, and the federal government seeks to generate revenues from that aspect. And also, if we look at the Finance Act of 2021 that became effective 1st of January 2022, and there are certain initiatives in there around now sale of shares will now be subject to capital gains tax, which was previously exempt, right? Government is basically looking at that to generate revenue. And there's also the sugar tax, right? The excise duties of 10 naira, right, on certain non-alcoholic carbonated beverages that are sold in the country. So basically, governments are looking at both traditional and non-traditional ways of generating additional taxes in a way that doesn't burden the average Nigerian person.
Which is also taxing phone calls, and we've had a whole lot of kickback as well from telecom subscribers as well. To what extent do you think we have the ability to be able to embrace these taxes, really?
Yeah, so I think one thing that we do need to note is, given the pandemic and the double shock leading to the oil price, right, which basically Nigeria is a mono economy, right? When that happens, major source of revenue basically goes out the window, right? So tax is the really main source of generating sustainable revenue, right? That is something that other countries, likes of South Africa, likes of the United Kingdom, have basically anchored their economy, right? So you look at what is happening in the UK today, right, where they are seeking to levy windfall tax on oil and gas companies that are getting astronomical profits, right? Because and those are the ways in which it shows that governments are pretty much looking at their fiscal instrument, tax laws, right, to find ways in which they can tax revenues, they can tax profits in a way that does not hamper productivity and investment, right? And that's one challenge and balance that governments would have to they have to battle, right, at the thinking room, in terms of balancing incentives to promote investment and also balancing taxes to raise revenue for government.
Okay, now, but you made mention of the cost that we have to deal with, especially with regards to the recurrent expenditure of how much the government spends versus the capital projects we have to take in. But do you really think we have any chance at cutting the current debt levels we have in the country? Analysts' prediction for debt levels and also solutions to all of these problems sometimes seems a little out of reach in terms of how practical and implementable government can run with these solutions.
Yeah, so I think at this particular point in time, it does be nice to also remind that debt is not a bad thing, right? Right. One of the benchmarking Nigeria's position to other countries, you see that the debt to GDP ratio for Nigeria is quite low, right? It suggests that countries like South Africa, Kenya, who have a larger debt to GDP ratios, would have lower interest debt service costs to revenues compared to Nigeria. So that begs the question as to how can Nigeria basically address these issues, right? Because what we see is that when Nigeria goes to seek for finance, right, a lot of the in-country risks are factored, and Nigeria gets to pay a premium that ordinarily other countries would not have paid. Now, that focus, right, as to cutting the debt service levels for Nigeria, if we look at that is basically driven by the fiscal deficit that we have in our budget today, right? And if you look at our budget for 2022, which is around 17 trillion naira, right? If you want to do a budget expenditure per capita, right, that means that Nigeria is pretty much spending $200 per person in Nigeria. And that's almost ridiculous, right? If you compare to other countries such as Egypt that are spending $1,500, or South Africa, again, who is spending around $2,500 per person, right? And you would know that with that, having that in mind, and I'm not even going to the US, right, where a state has pretty much a budget that's almost the total size of Africa, right? Now, if you look at that situation in Nigeria, it is very paramount that debt level, right, is actually required to sustain the level of expenditure of government. But the question then now that begs is, how judiciously does the government utilize the debt that they collect, right? How accountable are we holding the government, right, on how they spend such debt raised, right? If we look at the subsidy, for example, right, which is pretty much going to take a lot of the borrowings that we're going to take in 2022. Right, so a bigger chunk of it, thank you, right? It's something that is driven by an oil price that in Nigeria we do not control, right? We actually do not even know, right, in specific terms, the amount of petroleum products we consume, right, on a day-to-day basis. That seems to fluctuate whether we have our borders closed or we don't have it closed, right? And also looking at in terms of how much of it do we expend in capital projects that can create sufficient positive multiplier effects into the economy, right? And I would just end by saying that it's pretty much getting government, right, to ensure that they properly utilize every debt that they use in viable capital projects that can benefit Nigeria as a whole.
Babatunde, let's now play pundits. We are wrapping up the conversation at this point in time, and playing pundit really has to deal with forecast here. What's your forecast, your outlook for the debt to GDP ratio for the year 2022? And how do you think this would also shape up the tempo for the economic performance for the next government, the next administration that will be taking power come 2023? It's already a done deal for the Buhari administration. It's not necessarily a clean new slate for anybody coming in because we have a whole lot to have to deal with. But how do you think this sets the tempo, whether or not right, for the next government coming to take the reins of power?
Yeah, so thank you very much. Now, in terms of the debt to GDP estimation for 2022, right, that seems to, should I say, vary, right, depending on who you're speaking to, right? So I'm sure that if the DMO comes out with a number, given where we are today, of around 23% of GDP, right, they would expect that would basically end the year around the mid-20s, right? But we know that IMF came out in recent time to state that if care is not taken, we'll most likely end the year, right, at around 35%. And I think that might have factored in some of the borrowings that government are still going to make, right, during this year, right? And given the fact that it continues to go year on year without any significant change, right, in our revenue generation, and this is absent of any additional shocks, right? I think we're getting used to shocks nowadays, right? Then we'll find it we're paying over 100% of our revenue generated as to service debt. Now, as it relates to the incoming government, government is a continuum, right? Pretty much the Buhari government continued from where the Jonathan government left off, and so the incoming government as well will take off from where Buhari left off. People will say that the debt stock for the country grew astronomically during the Buhari regime, I think slightly due to the recession we had early on and also the pandemic, right? But that's a big problem that the incoming government will have to tackle on day one, right? I mean, day one,
It's no
because
easy feat to have to
really,
maneuver through.
it's something they just have to just deal with in day one in terms of ensuring that we maximize our revenue generation, right? Make sure that it's sustainable in a way that doesn't burden Nigerians any longer. How do we bring additional tax payers who are outside the tax nest into the tax nest? How do we foster private sector investment? How do we make the investment environment very conducive, right, for private equity? Because government can't do it alone, right? They need
Exactly.
private investors to bring their money, right, to basically provide these investments that would benefit the Nigerian people.
However, we are all heavily dependent on how well the government stimulates the business climate to be able to support a business environment that would also help the private investments to also thrive better. Thank you so much for your time on the show today. It's quite wonderful having you to do this with us. Senior Manager, Corporate Tax Consultant at PricewaterhouseCoopers, Babatunde Olani. And we hope we see government take really the reins of the economy much more seriously and receive the benefit and the dividend of our democracy. Thank you once again.
Thank you. Have a good day.